ready to trade August week 1. In fact, today is Saturday, August 1st, 2020. Okay, so as we approach August week 1, we take a look back at the last 3 days of July that we just traded and finished the month. Thursday and Friday was all stuff that settles in August, so it was just all for show. There was really nothing about July other than where we land the candle on the chart for history. So that's all that this end of day move could have been about. It's possible that that was all that it was about, but let's talk about the underlying factors that got us here to close so strongly at the end of the day on Friday. Wednesday, we were trading up, trading up higher, looking above into this gap, and trying to get a close above 32.59.81, trying to close back inside the gap. But at the end of the day, we got a little sell program and closed just below the entrance to this gap. And then sure enough, there was some negative GDP data out of Europe. The German GDP number was much weaker than expected. And then our weekly claims were worse than expected. And then our GDP, just all piled on, and we gapped down open on Thursday, and we traded all the way down to a lower low on the week, testing 3,200 again. We held at 32.04. So we made another higher low this week than we did last week. And once again, holding about 3,200. And then we powered back on Thursday ahead of FANG earnings, but once again, stopping short around this 32.51 to 53 support resistance band that's been with us for 2 weeks. And then FANG reported overnight Thursday, and there was some positive news out of Washington right after the close on Thursday. Futures shot up, and when futures reopened for Friday overnight, we were actually trading way out of here. We were trading all the way up above 32.80, like 32.82 or so we would have been at, and we should have opened above 32.80 and continued on to 3,300 on Friday. But as the morning came, we found that the news out of Washington was not positive after all. They're still at a stalemate there, and obviously there were fund managers who were not long enough yet into FANG, and so they made the rounds. Please don't publish your upgrade just yet. Wait until the end of the day on Friday, or maybe publish it on Monday. Give us the day to get our act together here. We're short a lot of S&P 500 and NASDAQ calls, and we gotta get this market down so we can cover, and then we will buy lots of FANG, and you can publish your earnings upgrades and so on and so forth. So that's me conjecturizing, but I'm telling you, I think that that's what happened. So we opened on Friday. We fell down to 31.53 to 51. This is a great area of support and resistance, and I think we should move our line in the sand up to here this week. We fell down to the 2020 positive or negative level. That's where we closed 2019, 32.30.78. Tried to bounce again to 32.50, and then fell over, and we marked our low of the day. What was our low of the day? It was just above the weekly open. And we turned there. Why? Because they did not want to turn the weekly candle red. If they had let the weekly candle turn red, I guarantee you we would have taken this high to this area here, and we would have doubled it down, and that would have been our 100-point down day. But we would have, in doing so, we would have broken down through the 20-day and so on and so forth, and I don't think that they really wanted to do that this week. I think that they just wanted to get their shit together from whatever they had short up here. And then we turned it around. And sure enough, rumors were that it was going to be a big market on close to the buy side. An early market on close came out, I guess, here from what I've gone back and read. And that was $1 billion to buy, and that got us here to this 32, back to this 32.51 to 53 level. You can see we consolidate a little bit. And then rumors were that was going to be revised way up. So boom, we popped back above 32.60 and back up inside the gap. And then sure enough, in the final 10 minutes, that final market on close came out. It was all the way up $4 billion to buy. Everybody's buying Apple and FANG and so on. And we wound up getting our daily candle to close back green at the end of the day. Okay, so coming into next week, what we need to do now is to hold. We need to open and hold and not break intraday down below this 32.59.81 level. If we break down below 32.59.81, that is your opening level to be bearish, in my opinion. Buying puts, whatever, selling calls, whatever you want to do. and your confirmation now is moved up here to this 32.51 to 53 level. If you have problems remembering this, just think of your 80 handle rule. As long as we hold above 32.60, we're going after 32.80, and if we can bust over 32.80, we're going to 3300. That's all part of this gap. If we can't hold above 32.60, we roll back, and if we can't hold above 32.51, we should probably roll over and get our 100-point down day. We don't have to have a 100-point down day. It could be a 100-point down week, whatever, but there are a lot of people who are looking for the S&P 500 to break 3,200 and trade down below it, okay? Speaking one more time about this 32.51 to 53 band of support and resistance, it started back here during July week 4. You can see here was a close on 32.51. Here was an open, and here was a gap up open, and then trade all the way back down here, but bring back the close above this area. And then here was an open on this area and trade up, and then here was a break of this area, and you can see on the break of this area we doubled down this day. This was Thursday, a week ago Thursday. Another thing that was going on this week was the 10-day simple moving average. Here was a week ago Thursday, and then the gap down Friday below this level and closed the week below the 10-day. And then on Monday we closed above it, and Tuesday we closed above it. Wednesday we closed above it, and then Thursday we followed through with another close above it. And then Friday you can see how the 10-day simple moving average just about split the daily candle in half. So we doubled up when we regained that at the end of the day, doubled up the range, and we put in a weekly close back above the 10-day and our third close in the row back above the 10-day. So the bulls have the ball now. They need to advance it up the field and get past 32.80 and get onto 3,300. When we look at the weekly time frame, we were looking to see if we could make a higher weekly close, and sure enough we did. And not only that, but we closed inside the gap on a weekly basis. And this gap in the first place is a weekly one because it's where we closed February week 3 and opened February week 4. And then you can see here was that level, that 32.19.84 level where we opened the week. Had we broken down below this, we probably would have doubled the whole week's range down, and we would have been down here for a good solid look above the 50-day simple moving average on a daily time frame, 10-week simple moving average on a weekly time frame. They're not the exact same level, but they are very close because 10 weeks, times 5 is 50. So that is 50 days, but since this is average of where the weeks, close, it's a little bit different number than the 50-day is, but it's very similar to it. So when you see this 10-week simple moving average on a weekly chart, it's very similar to the 50-day on a daily chart. And then finally, here is the roadmap chart, the daily roadmap chart, but expanded out to show you the upside and more of the left side of the chart, the early part of the year where we were trading at the all-time high. And here is that big gap. You can see there are no levels inside of it for us to trade. So this is where our 80 handle rule comes in and helps us. And sure enough, this first approach inside the gap failed 1 penny short of 32.80. And if we just got to come in next week and get above 32.80 and move on and take a shot at 3,300. And if we can get above 3,300, we're looking to get about to 33.25, 33.30 or so. There is a level that will help us out up in here, above here. It's the low of the day that represents this gap. And the low of that day was here at 33.28.45. So once we get above 3,300, it's that 33.28.45 level. It's going to be probably, either really hard to get past, or it's going to spark the short covering rally to end all short covering rallies and transfer us all the way back up here and above this gap. Okay, I don't think that'll happen, but just know that that's there when the time comes, if it happens this week. Speaking of this week, I've done like 3 or 4 versions of this video. I just want to make sure I haven't repeated myself, but I want to get across that there is something coming up next weekend that's really important. Last weekend was the last of the extended unemployment benefit checks went out. Next weekend is the last of the checks that can go out for the PPE, for the payroll protection program. So if they don't have their deal worked out at some point next week, and that PPE is allowed to expire, I think that could be a big catalyst to the downside. So let's keep that in mind. Let's keep this little tail on this candle at 33.28 if by chance we blast through 3,300 this week. And let's remember that if we break down below 32.60 and fall outside of this gap again, we're probably going to sell off. I bet you we won't hold this 32.51 to 53 area. If we do, maybe we're going to bounce and chop and drive each other crazy again, in this area here. But I have the feeling if we don't open inside the gap on Monday, or if we open inside it and lose it, this is going to be where the plug gets pulled and we sell off quite a bit come next week. Okay? Hope this helped you out. Have a great rest of your weekend. Good luck and good trading.